A new global power struggle has started, but this war isn't being fought with armies and tanks. It's a war of code and digital currencies. Forget what you thought you knew about economic power. A digital Cold War is heating up, and the winner won't just control the future of money, they'll lead the world. This is the race for digital supremacy. For the last 80 years, the world has run on a single currency, the US dollar. It's been the bedrock of global trade, the foundation of international finance, and the ultimate symbol of American power. But that era is ending. The battle lines for this new conflict are being drawn on a digital battlefield where controlling the flow of money means controlling the world. This isn't some far-off futuristic scenario. It's happening right now. Nations are scrambling to build and deploy a new kind of money, one that's faster, programmable, and woven directly into the internet. And in this race, three combatants have emerged: the centralized ambitions of a rising superpower, the decentralized ideals of a tech revolution, and the old guard now forced to defend its throne. The outcome is going to redefine our relationship with money, privacy, and power for the next 100 years. At the heart of this digital Cold War, you'll find two superpowers with completely different visions for the future: China and the United States. First up, there's China, the undisputed first mover. While the rest of the world was talking, China was building. Its weapon of choice? The ECNY, or the digital yuan. Now, this isn't a cryptocurrency. It's a central bank digital currency, a CBDC. Think of it as a digital version of cash, issued and controlled directly by the People's Bank of China. The ECNY project isn't just a tech upgrade, it's a masterclass in geopolitical strategy. For years, China has wanted to cut its dependence on the US dollar and the financial systems America dominates, like SWIFT. The digital yuan is the key. It lets China build international payment channels that completely bypass the dollar. China is already pushing the ECNY for global trade and plans to create an international operations center to boost its use. But the real power of the ECNY is in its design. It's both programmable and traceable. The central bank could, in theory, see every single transaction. It could even program the money itself, setting expiration dates to force spending or limiting where and how it can be used. While China says it will protect user privacy, that level of control is a powerful tool for state surveillance. With pilot programs running and 180 million personal wallets created as of July 2024, the digital yuan is no longer an experiment. It's a reality being scaled for a new world order. On the other side of this digital divide is the United States, the reigning financial superpower. But its strategy is fractured. Officially, the US is taking a cautious, almost resistant approach to a public CBDC. The Federal Reserve has done some research with MIT on Project Hamilton, but it hasn't committed to issuing a digital dollar. This hesitation comes from deep political resistance. In May 2024, the U.S. House of Representatives passed the CBDC Anti-Surveillance State Act, a bill written to stop the Federal Reserve from issuing a retail digital dollar without Congress signing off. Supporters argue a government-run digital currency would be a surveillance tool that clashes with American values of privacy and freedom. And yet, while the U.S. government publicly rejects a state-run CBDC, it's quietly encouraging a private sector version of the digital dollar to thrive. This is America's counter-move, letting the market innovate. This split strategy, saying no to a public CBDC while cheering on private digital dollars, is a high-stakes bet. By holding back on a sovereign digital currency, the U.S. might be giving up its influence on how the world's future money is designed, letting its rivals write the rules for the new digital economy. To really get this conflict, you have to understand the weapons. This war is being fought with two very different technologies: central bank digital currencies and decentralized cryptocurrencies. They might both be digital, but philosophically, they're worlds apart. CBDCs, like China's digital yuan, are the government's response to the crypto revolution. They are centralized, regulated, and a direct liability of the central bank. They're an evolution of the current system, meant to make it more efficient while giving the state tighter control. The goal isn't to invent a new form of money, but to upgrade the old one for the digital age, complete with new tools for surveillance and control. Then you have Bitcoin and the world of decentralized cryptocurrencies. Born out of the 2008 financial crisis, Bitcoin was created for a radical reason: to be money that no government or bank could control. It runs on a global decentralized network, which means no single person or group can shut it down, censor transactions, or print more of it. It's borderless, permissionless, and it fundamentally challenges the government's monopoly on money. But this isn't just a two-way fight. A third powerful force has risen from the private sector: stablecoins. These are cryptocurrencies designed to hold a stable value, usually by being pegged one-to-one with a major fiat currency, most often the US dollar. Companies like Tether, the issuer of USDT, have become financial giants. Think of stablecoins as a private, lightly regulated extension of the dollar system, just running on crypto infrastructure. They give you the speed and borderless nature of crypto with the stability of the dollar. Their influence is massive. As of its report for the end of 2024, Tether held over $157 billion in assets, a huge chunk of which are US Treasury securities. This effectively makes a single crypto company one of the world's largest holders of US government debt. Bigger than many countries, it gives the US a kind of digital dollar dominance by proxy, but it also creates new risks that regulators are only now starting to tackle. Recognizing the opportunity and the threat, governments are now moving to regulate stablecoins. Hong Kong, for instance, implemented a full licensing regime for stablecoin issuers that went into effect on August 1st, 2025, laying down strict rules for their reserves and operations. The message is clear: the Wild West era of unregulated stablecoins is over, but not everyone sees them the same way. In its 2024 Financial Stability Report, China's central bank reaffirmed its tough stance on crypto, viewing all crypto transactions as illegal financial activities. This shows that Beijing doesn't see dollar-pegged stablecoins as neutral tech. It sees them as a direct threat to its capital controls and the rise of its own digital yuan. And the battle lines couldn't be clearer: centralized state money, decentralized networks, and privately issued digital dollars. This digital Cold War isn't just a US versus China story. Countries all over the world are being forced to pick a side or forge their own path, turning the globe into a geopolitical chessboard for digital finance. Look at the European Union, positioned somewhere between the American and Chinese models. The EU is working on its own CBDC, the digital euro. The European Central Bank is speeding things up. The latest plan suggests that if legislation is passed, pilots could start around 2027, with a possible launch sometime in 2029. The EU's big selling point is privacy. It wants to build a digital currency that offers the efficiency of a CBDC without the big brother surveillance risks of China's model, trying to find a middle ground. Then you have the mavericks, the nations using crypto to go their own way. For a while, the most famous example was El Salvador. In 2021, it shocked everyone by making Bitcoin legal tender. It was a bold experiment in financial freedom, but the experiment ran into some serious problems. Facing low domestic use and pressure from the International Monetary Fund as part of a loan deal, El Salvador's government amended its Bitcoin law in early 2024. The mandatory requirement for businesses to accept Bitcoin was dropped, making its use optional. While the government still promotes Bitcoin, the reversal shows just how hard it is to break away from the traditional financial system. Meanwhile, other nations are becoming accidental crypto hotspots, not because of government policy, but because of their people. Take Nigeria. With soaring inflation and a currency that's losing value, millions of Nigerians have flocked to crypto, especially dollar-pegged stable coins and Bitcoin, just to protect their savings and make transactions. Between July 2023 and June 2024, Nigeria processed nearly $59 billion in crypto transaction value, making it a world leader in grassroots adoption. After first trying to ban crypto, the Nigerian government has changed its tune, passing laws in 2025 to regulate the booming market. Nigeria is a powerful example of how regular citizens are driving the crypto revolution from the ground up, using it as a lifeline against economic instability. We're watching three models take shape: China's state-controlled surveillance coin, America's gamble on private sector dollar stablecoins, and the bottom-up demand for decentralized freedom we see in places like Nigeria. Each has powerful forces behind it. So what do you think? Which model will win the future of money? Let us know your prediction in the comments. We want to know which side you're on in this digital Cold War. This global fight over the future of money might seem abstract, but the stakes are incredibly personal. This isn't just about which country comes out on top. It's about your financial freedom, your privacy, and your wealth. First, privacy. A world run by central bank digital currencies, especially ones built for surveillance, could spell the end of financial privacy. In a system like the digital yuan, a central authority could have a record of everything you buy, every service you use, and every person you pay. This data could be used for social credit scores, to enforce political conformity, or to control your behavior by programming your money to block certain purchases. That's the dystopian risk. It's not just a record of your past, it's a tool to control your future. Second, this is a battle for financial sovereignty, for nations and for individuals. For decades, the dollar's dominance has given America a powerful weapon: sanctions. Rival CBDCs and cryptocurrencies offer a way for other countries to get around that system. For individuals, it's even more personal. In countries with shaky economies or authoritarian rulers, crypto has become a lifeline for escaping inflation, capital controls, and censorship. It lets people own an asset their government can't easily seize or devalue. The rise of centralized digital currencies threatens to slam that escape hatch shut, replacing it with an even more powerful system of financial control. Finally, this is about the future of wealth itself. The dollar's status as the world's reserve currency creates massive global demand for U.S. assets, propping up American markets and making it cheaper for its government to borrow. If the world moves to a multipolar currency system, where the digital yuan, the digital euro, and maybe a neutral asset like Bitcoin all coexist, demand for the dollar could fall. That could have huge consequences for the global economy, possibly leading to higher inflation and a major rebalancing of economic power away from the United States. The stability we've all taken for granted for decades is now on the table. This isn't just a tech shift, it's a fundamental rewiring of the relationship between citizens, money, and the state. The convenience of digital payments could come at the cost of surveillance and control we've never seen before. We're standing at a historic crossroads, watching a new monetary world order being born. The pieces are on the board, the players have made their opening moves, and the battle for digital supremacy is on. The outcome is anything but certain, but three possible futures are starting to take shape. In one scenario, China's head start pays off. The digital yuan becomes woven into global trade through programs like the Belt and Road Initiative. Nations tired of relying on the dollar adopt China's alternative financial system. In this world, Beijing sets the rules for digital money, and its model of centralized control and surveillance becomes the global standard. Economic power shifts decisively to the east. In a second, and maybe more likely scenario, no single power wins. Instead, the world splinters into digital currency blocks. A dollar sphere, run on regulated stablecoins and private innovation, competes with a eurosphere built on privacy and a yuan sphere centered on state control. Trade between these blocks gets complicated. A new digital Iron Curtain falls, dividing the world's financial systems into fragmented and possibly less stable pieces. But there's a third, more radical possibility: the decentralized revolution. In this future, neither a government CBDC nor a private digital dollar becomes the world standard. Instead, a truly neutral, decentralized asset like Bitcoin emerges as the global reserve currency, a kind of digital gold for the 21st century. Nations would still have their own digital currencies, but they would all be measured against a global apolitical standard that no single country controls. This would be the ultimate disruption. A world where money is finally separate from the state. Each of these futures comes with its own promises and dangers. We are living through the biggest transformation of money in centuries. The comfortable certainties of the old financial order are gone, replaced by a fierce and unpredictable contest for power. The technologies are being built, the strategies are in motion, and the world is holding its breath. In this digital Cold War, the winner won't just control the future of finance, they will shape the future of freedom itself. The only question is, who will it be? This battle is changing every day. To stay ahead of the curve and understand what these massive shifts mean for you, make sure to subscribe and hit that notification bell. The fight for digital supremacy is the defining story of our time, and we'll be here to cover every move. Thanks for watching.